All right, man. So I'm actually gonna walk you guys through a trade that I took after stream, man. I took three losses today while I was on stream, but continued to look at the charts a little bit after, and I was able to catch a nice move. So I'm actually gonna just break this down to you guys, kind of like what I was anticipating in the market. So as you can see, we had CPI 830, bullish move upwards. I tried to catch the buy at the 930 open to attack this buy side liquidity. We eventually sold lower throughout the New York AM session, below right here, which is Asia lows. So we ended up catching this particular move. Well, I didn't catch the move, but this transpired in price, right? And I was able to become a participant, or this made me aware of, like, I need to come to the charts around this time. So kind of like, what does that look like, right? My strategy is really centered around trading liquidity, so above old highs and old lows, and trading below the lows. So once we traded below Asia low, you can start to see we get some sort of displacement or a V-shaped recovery back into the range. Let's go on a 1 minute and see what does that look like. As you can see, we sweep Asia low, right? Bullish move upwards, down, and we get one final push below the low right here before we get that market structure shift. This gray box right here is our 5 minute fair value gap, which is a series of three candles: candle 1, candle 2, candle 3. This inefficiency in price is abyssal. So my eyes are drawing towards this for an entry to go long after we have swept Asia lows. We also get this particular signature in price too, which I should have been a participant in, but I just didn't see it around the time. This bearish fair value gap right here. Once we sweep this low, right, and we start to close above that gap, this can be an entry right here to go long into the market. Why? Because we are below an Asia, because we're below a previous low in the market, which is Asia low, meaning that number one, anyone who was a breakout seller in this trade, they're about to get drugged into the market, as you can see right here. But let's continue to go back into it. I lost my train of thought. But still recording. 5 minute bearish fair value gap. This right here, like if you're experiencing this and price is leaving you right around this time, it's 10:57. We're in the macro, right? My eyes would have been drawn towards this fair value gap as an entry as well. But as you can see, price is building, right? We're kind of like, I can say consolidating, but we low key are. This is low resistance liquidity. Meaning that people who initially didn't catch this move, they're buying, right? They're buying. And what happens? The market comes down one final time because I'm pretty sure they're putting their stops below these lows, right? The market drops down one last time into what? That 5 minute fair value gap. I don't know why it keeps bringing me back to this other day. So we come back into this 5 minute gap, right? Notice how once we come through here, we wick, right? That's showing that price is rejecting from that area. And this is a pretty volatile candle. This happened in like 1 minute in price. Boom. At this point, this more is about just chart experience, right? This thing could have just kept falling off the face of the earth, but at this point in time, I am looking for longs. So I'm paying attention right here, right? to how candles are reacting. So we kind of have this bearish fair value gap. Once I start to see this candle close above, I enter in this one with just taking about 25 points of risk on at the market. So my stop loss was about right here. Again, this was a really risky trade, but as you can see, I was in drawdown for like 2 minutes, right? And as you can see, price immediately started to go into our favor. I believe this trade I caught about 68 points. So I caught it to right here, which was our minus 2.5 standard deviation. So me fibbing the last manipulation leg lower, right, that took out this low, I'm fibbing this move to get my projections. -1 standard deviation, -2 standard deviation, -2.5 standard deviation. As you can see, we did trade into the range of the -3.5 to -4 standard deviation, and then what did we do? We sold off. Yeah, so -3.5 standard deviation to -4, we sold off in that area. So this, like I said, these are like great spots to like take profit. This would have been 107 points if I had chose to held. But as I go back and I think about this trade, right, what could I have done better? And again, like I said from the earlier video, I took 3 losses. I took 3 losses prior to taking this trade. I'm down $337 on the account. One thing I did, I went back into the market with 5 contracts. I should have not done that. If anything, once I took in a series of losses, well, it wasn't even a series of losses. I took 2 break-even trades and 1 loss. I need to go back into the market with reduced risk, whether that be 3 contracts or 2 contracts. Secondly, if I'm getting to the point where I'm floating X amount of dollars, right, I go break-even. I try to have no risk on the table. So the trade does look like this, but I need to start to, again, move my stop into profit to accumulate losses, some of the loss that I've already occurred throughout the day. But when I got to this area of that -2.5, right, I started to get antsy right here. What I should have done was taking about 2 contracts off, and then let the remaining run into my final TP instead of just collapsing the entire position. Once I was about like right here, right, I was floating about $700 or $600 something,